A controversial business had controversial earnings. Today we look at Palantir Stock, we look at the Q4 earnings, we look at the financials to see what happened, what did the management report, what does the outlook say for the next year, and where the company is heading. Hi, if you're new here, my name is Robert. I'm gonna bring you the earnings today of Palantir, and we do earnings and other stock analysis on this channel. So if you like this content, please consider subscribing and liking the video. As always, we're gonna start off with the earnings summary, then we're gonna go through the financials, then we're gonna have a look at the key business metrics for Palantir, and then, as always, we'll look at the valuation to see where some of the key multiples sit for the company at the moment, whether it's considered a deal or not, basically, and where the long-term vision for this company is. So starting off with the earnings here, so we have Palantir revenue tops expectations, but earnings fall short of expectations. So we had them reporting a fourth quarter net loss of 156 million or 8 cents per share, compared with a loss of 148 million or 8 cents a share in the year prior. So after adjusted stock-based compensation and other expenses, Palantir earned 2 cents a share, down from 3 cents a share a year earlier, while analysts tracked by FactSet were expecting 4 cents a share. So slightly below that 2 cents versus 4 cents expectation. In terms of the revenue, it rose to 433 million from 322 million, while analysts surveyed by FactSet had been anticipating 418 million. So we did beat revenue here by over 10 or 15 million dollars in terms of the analyst estimate. So we did, beat revenue, but what in the end of the day came down to the earnings per share, to the net income, that fell a bit short of the analyst expectations. But let's dig straight into the numbers, dig a little bit deeper to see what caused the discrepancy in revenue growth to the positive side, but to the negative side, what made the stock miss expectations here. So here we have some of the key financial metrics for Palantir. So from a year-over-year growth and margin perspective, total revenue grew 34%. Whilst government revenue of that, which is the key business as of now, is the key business of Palantir, only grew 26%. So the majority of growth came from the commercial revenue side, 47% up here. The US commercial side grew by 132%, so over doubling the amount of revenue generated from their US customers. Adjusted operating income sits at 124 million, which represents a 29% adjusted operating income margin. Free cash flow 104 million, looking at a 24% free cash flow margin here. Overall GAAP gross margin of revenue minus cost of sales is 80%, very strong number, typical for sort of a software business, a SaaS business. So at the glance here, we will be happy with the numbers. They're looking pretty strong. Obviously, we have to dig into this a little bit deeper to understand what were the key drivers for the growth. But looking at this, you would think that the stock would have amazing, results and amazing reaction. But we did actually see, based on that and based on the earnings report today, a drop of 16% during the day. I mean, that was accelerated by some of the macro fears we had in the market. But let's head into the numbers to see what the growth looked like and why some of the growth looks like the way it is. The next slide is just for the whole year, so for the full financial year. The one before was a year-on-year comparison for Q4. This is for the whole year, so we have 41% revenue growth overall. We do see the same sort of picture. Commercial growth was strong, but on an overall perspective, we did have governmental revenue growing more than commercial revenue, so that the commercial side of the revenue only grew more towards the end of the year. So that's why we had big growth numbers for the Q4. But for overall, we did have government being the majority of the revenue, plus also the majority of the growth that for the revenue in total overall. Free cash flow margins and gross margins are similar to the Q4 margins, so we're not going to get into that more. But let's dig deeper into the governmental revenue and the commercial revenue side. But before we dig into the governmental and commercial revenue, let's dig a little bit deeper into operating metrics and some of the key business metrics for Palantir. So this slide here is an illustration of the TAM expansion of their 3 key products that they're offering at the moment, just to see, when they've been launched basically, and how they have expanded since then. So obviously management here expect, so Gotham was their first and is the biggest product basically by revenue, and the oldest as well. So it was launched in 2013 and has since expanded, exponentially basically until today. Not expecting a huge growth from that anymore, but we do see it basically going into steps now. Then Foundry was built in 2017, released, and since then we do see an expansion until 2024. And then Apollo, the kind of newer, bringing Palantir SaaS to any environment, so applying that what used to be a governmental product for also to businesses, obviously, because that's the only way they can expand, as we're gonna see soon, because governmental revenue, they pretty much hit a peak there. So this is the next step for the business that's obviously growing beyond 2024. This is the long-term vision, and that's the product that's going to be applied by many other businesses. In terms of customer growth, so what happened is that from 2020 to 2021, we did have a 71% of customer growth, from 139 to 237. That might not sound big, but each customer pays usually at least $1 million of sort of the recurring revenue, which obviously it's an expensive software, but it gives you sort of the insights and the data to actually optimize your business and get more profitable. So it's usually worth it. So what we do want to see here is the net dollar retention. This is an important metric. So for a subscription-based business model where you have a software where there's ongoing revenue from an existing customer, where they're not buying a product every year like an iPhone, for instance. So you do want to see that the net dollar retention amount is at least 100%, because that means that your existing customers, so the 139 from last year, they're generating at least 100% of that last year revenue. And what you obviously want to see in addition to that, which is a similar number to Twilio, similar strong numbers, you want to see a expansion or an increase above 100%. So we do have 131% net dollar retention, which means that of those customers from back then, from the 139, they are generating 131% of the revenue that they used to. So that means they're using more of the software, or they've been upsold to additional products and so on, or just simply through price increases. But it does show that the customers that we've already acquired remain within the business. And obviously total customer growth of 71% is also very strong. So one of the important things we need to discuss obviously is the commercial business of Palantir. So as we've seen before, the 3 products, now we have the Apollo, the 3rd product, which basically can apply by any sort of entity or any business. So, and this is what the next step, the next level of growth for Palantir is gonna be, because obviously they started off as a government intelligence company, supplying only governments, and now in order to expand their market cap and their valuation even further, they need to go into commercial business. So we did see the commercial momentum for this year really going up towards the end of the year. So in the last 2 quarters, really impressive growth numbers of 37 and 47%, which means that there's exponential growth here happening in the commercial sector, which is exactly what management was aiming for. Net dollar retention here overall at 113%, which is good. And for the US, where the growth was also the highest, the dollar retention is actually 150%, really impressive numbers. So this is really something good we want to see. Customer grew 200% from 47 to 147. What we do have to say though is that although this is impressive growth here, if we go to the next slide, they have a slide extra for US commercial momentum, because we do see really exponential growth here, 70% to 132% in the year, growing their customer base 371% from 17 to 80. So we do see a strong focus or strong growth coming from the US market, which obviously is good as from a growth perspective, but it's also a risk that we do want to see them expanding into more of the other markets where there's money to be made, like for instance Europe or Asia. And I think this is what Alex Karp in the call mentioned as well, that they're focusing now on Europe and the expansion there, because international expansion ex-US didn't look as strong as the US. So the US commercial growth made the overall commercial growth look much better than it was if you were to exclude it. Here, coming now to the non-US commercial growth, we did see much lower numbers. I mean, nice growth numbers as such, but for a business like Palantir, you would actually expect more growth coming from also the international markets. I mean, why are we able to grow US revenues and customers over 100%? Whilst non-US only 7-14%. I mean, we do see an uptick here as well, but it's not as exponential as the US market. So the US market actually really outperformed and made the commercial numbers look really impressive. So we do have a factor here to consider, and Palantir needs to focus more on the non-US market going forward. And I think that's going to be important to see. And also what's kind of not alarming, but a little bit definitely something to note, is that the non-US commercial net dollar retention is only 103%. So we only barely keep up with the same revenue number that we had before. Ideally, we would see numbers as they were for the US market of 130+%, which do indicate that not only are we able to keep the revenue from the existing customers, but we also are able to add on to that. And here we kind of barely keep the revenue that we have generated before. Coming now to the government business, that's obviously the key pillar still for Palantir, and that's how they started out at. And we do see some good numbers here, although it's basically the opposite picture of the commercial side. So we do see growth still impressive. I mean, 66% is impressive growth. But you do see it slowing down as the dollar amount obviously also gets bigger. So we're talking, maybe 5x or so from the commercial business. Obviously, percentage goes down as the dollar amounts go up. But it overall adds to the story that, we kind of reached the maturity of that government business sector, now heading more towards or focusing more on the commercial side and growing that, the B2B business. That's not an alarming thing that the growth goes down. It's more a fact that they've already have a big market share and they kind of reached their full potential here almost. Still growing at 26%, which is a massive, reaching, those $1 billion of revenue. Net dollar retention as such is very good for international, even better than for the US government. Overall 146%. So that means basically if a government buys Palantir's product and starts to implement it, it's just gonna be so hard for them to get rid of it again and just not keep using it. So they it's actually the opposite. They're actually using more services as they implement it. So that means once you win a government, it's highly likely that you're gonna stay with that for the next upcoming 5 to 10 years. I mean, there's not gonna be any change to be made there once they made that investment into the software. I mean, we did see a similar numbers, for the US commercial business side. So I guess it's once you decide to go for Palantir, it's a sticky business model. You will stick with it and probably not head to a competitor because obviously it's a good software, but also it's going to be hard to flip over to a new data analytics software. Now going to the financials of Palantir, as we see gross margins over the year, GAAP gross margin and adjusted GAAP gross margin, all pretty strong around the 80%. Doesn't really go up or down. It's basically just remaining flat, but flat at a very good level. So obviously for a SaaS business, that's what you want to see. Really strong numbers, which then adds to the possibility to make higher net income going further down the road. As you increase the amount of customers, you're obviously making a lot of profit that comes down and if you can control your operating expenses, basically meaning that you will end up with a big net income further down the road. And the next slide here is the operating income, operating margins basically for Palantir. What they want to show here is one is the GAAP operating margin sitting at a 30%, which is kind of good, good for that type of business. Then down here, you have an adjusted operating margin, which excludes share-based compensation and related employer taxes, which is running at a negative, but we do see a slow growth into the positive territory. And as the headline suggests, we do have operating income while they're investing in growth. So obviously they have massive expenses to R&D, but also into the employees that are basically helping to grow the business. So that's what the share-based compensation is. We will see that later on as well, because that's one of the concerns that's always been raised with Palantir. But what we do want to see is remaining consistent around 30% here, whilst the adjusted operating margin is heading towards a positive territory, which just speaks for the business that although they're still in a massive expansion and R&D phase, they're still making progress towards profitability. So then looking at this slide here, we are having the gross profit while adding was basically reconciliation from gross profit to adjusted gross profit or adjusted gross margin. So we start off with revenue minus cost of sales, which is this number here. We do see a steady and really good growth over the years. It's just really good to see that steadily this keeps going from a year-to-year perspective. That's obviously around 500 million gross profit increase. And quarter by quarter, we do see it upticking every quarter, which is good to see. What they've done here is basically reconciled it to the adjusted gross profit by adding back stock-based compensation. So that's already included in there. And you do see sort of, quite high numbers of stock-based compensation, which varies based on the quarter. Basically saying, okay, 139 million in 2020 compared to 68 million. So I guess that varies every year. We do want to see it not being too high, but this is always raised at one of the concerns that share-based compensation is really, really high and basically killing the profits. We do see, 2020 was 140 million. Now we have 68 million, not as bad considering we had a gross profit of 1.2 billion anyways. So we do have to keep an eye out on that. Obviously, good talent isn't cheap, right? Like you will have to invest into talents, and as common for a tech business, right? To have the best employees, attract the best employees with the best salary and stock packages. And obviously, Palantir is no different there. And in order to be excelling in this type of business, where you really need super smart people to be able to program what you are looking for, you do need to spend that extra dollar. So it's not a concern as long as we can keep growing the commercial side of the business in an exponential way and expand into the other areas of the continents, like other continents, basically Europe and Asia. So I do think the more customers we have, the less of an issue this will be, given that we have gross profit looking really strong at even if you don't add that back, we have around an 80% gross margin. So the amount of customers is going to be important going forward. The next slide here is the reconciliation of GAAP net loss per share. So we do start with the net loss attributable to common stockholders. We did have negative, we had a loss here. Basically negative means loss. 2020 was looking at 1.1, now only 520 million. Base compensation is big impact in there. So if you take that out and also the employer payroll taxes related to stock-based compensation, you do get to a positive number, and you can see how that positive number changes over time. But I mean, the reconciliation is nice to see that cleaned up profit numbers, but the stock-based compensation is not something you can just, cancel out and ignore. It's still there, and it did reduce the profit and turn it into a loss. So as mentioned before, we really want to see the top line growing exponentially, them going into many different areas of the world and getting many different business customers to be able to outpace that loss or the costs for share-based compensation. In terms of revenue numbers, so we did see over the past few quarters a steady growth from 289 in Q3 2020 to 433 million in Q4 21, which was obviously above the guidance. What what did disappoint a little bit, I think, is that, you know, for the Q1 of 2022, the company only, you know, expects like a 440 odd million to 450 million. Investors were looking for a bit of more of a aggressive or exponential growth. Gate those factors, as we mentioned before, the stock-based compensation, but also the uncertain environment that we're in right now, where you know, sort of loss-making companies are not really the focus or not really in favor as such, because obviously Palantir is trading at higher multiples, so we do want to see accelerating growth from a top and bottom line perspective. So yeah, I guess that's one part to why investors have reacted the way they have reacted. So now coming to the valuation of Palantir stock. So I've pulled up a chart here showing the price to sales ratio since the company went public in late 2020. So what we do see here is that they were trading pretty cheaply in the beginning once people got to know about Palantir, because they were quite a secretive company, although they've been around for a long time. Basically showing that over those few months following the IPO, a community or investor base has evolved around the stock. When we did have the sort of a little tech growth bubble in early Feb 2021, Palantir was trading the richest at 50 price to sales ratio, like completely just shot over the top, I guess, for what it was back then. Since then, it has really steadily but surely came down to now kind of levels that we've seen once the stock went public. So we are looking at around 15, 14, maybe even lower after today, which compares, yeah, as we said, to basically when they've IPO'd. So I do think from a valuation perspective, we did see it coming down quite massively. The fact that Palantir still has so much room to grow in the commercial business, and we've seen exponential rates in the US market. If they can do the same in Europe and other areas, I mean, then price to sales of 14, 15, 13 is really not that much. I mean, we can compare it to something like Twilio, I would say, where we have similar price to sales ratios. So it's always around, you know, above 10, you could say is still kind of, you know, reasonable. Obviously, if you're trading at a 30, 40 or even 50, you do have to be careful there to not get burned, basically. But I do think that right now we're looking at a really good entrance point for this type of stock, if you believe in the long-term vision of the company. And if we look at competitors, for instance, we can see that in terms of price to sales, I mean, looking at a Salesforce, which is a bit more mature now, they are trading at a 7 times price to sales. ServiceNow trading at 15, 16. I think ServiceNow, you can probably ServiceNow, Adobe in terms of was a bit more mature, but I guess ServiceNow, that's one you can compare to the stage of where they're at, you know, still growing rapidly. So we do see it's not a massively overvalued company at the moment, looking at a market cap of 28 billion. What we also have to think about in terms of Palantir is not just the, you know, pure valuation based on multiples here and there. Obviously, you're not going to look at PE, or you're not going to look at some of the ratios that, you know, value investors would actually look at here. So we want to see price to sales in a reasonable range, like, you know, not like over 20, I think. Also, you want to see, as obviously, if you are someone who will invest into Palantir, you are believing into the long-term vision of the company. So what I've done here is I pulled up a chart from the recent ARK Invest Big Ideas report for 2022, where they've projected here what could happen to the AI-based software, AI applications by 2030. So obviously, as I said, Palantir is not just a short to medium value play where you say, oh yeah, based on PE, I would say, you know, it's kind of 50% undervalued and might have a run up very soon or might adjust to be the right price. Palantir is a growth and story stock company. You want to invest into it for long term, and if you invest into it today, you are expecting to hold this for a long time. So by 2030, we're expecting this to be up to, it's a crazy number, up to the 80 $7 trillion, the AI applications market, including some of the hardware. So we're still looking at, let's say an $80 trillion market that Palantir could basically form part in one of those two categories here. And the question is, how much of that will Palantir take over? Obviously, this number could be wrong, but even if it's just 50 trillion, it's still a massive number, and Palantir has that advantage, best ones in terms of big data analytics. So if we go back to here and we compare this to the current market cap of $28 billion, we do see that, it could be 10x, 100x from here. If you believe into the long-term vision, that's easily possible, and even beyond that. And so you just have to believe in, will management execute? You have to track, what are they doing? Are they executing as they promised? Is the growth story intact, for each quarter, for each year? And then how realistic is it that they're gonna grab some of this market share, and how much do you think they're gonna grab of that market share? And that's basically how you build your long-term valuation goal. And for me, from my perspective, I think it's a really good buy at these levels. It's been beaten down, and I like beaten down stocks. I buy into this for sure, and I do think I will buy the dip here. Yeah, I think $28 billion in terms of a long-term vision is really not that much for what the company can actually achieve and what the company can actually provide to customers. The value it can create to all the businesses around the world. I do think that 28 billion is basically cheap, if you want to say it like that. Yeah. So I hope you enjoyed this video. Let me know in the comments what you're doing with Palantir stock, if you're an investor or not, and see you next time.